Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Great to see everyone. All right, so happy Monday, everybody. We're seeing a little bit of morning weakness in the equity markets, but Tuesdays are also known as turnaround Tuesdays. Not a guarantee of movement back higher, but certainly there's a tendency for that. We'll see how that pans out. If you're looking for overall direction of the market, gang, don't assume you're going to see it in the first 30 minutes of the clearing. But let's jump into some of the economic calendar here, taking a look at what could be some sort of catalyst for a shift in opinion. Now, yesterday, we talked about the fact that the economic calendar in terms of data was pretty quiet because we don't have a lot of data, US data coming out. And today is actually just devoid of any data. So then the other thing that I would check is, are there any central bank events? Usually if there's not a central bank event scheduled, like you'll see, meaning someone's speech, one of the FOMC members, I'll double check on tradingeconomics.com for something that we may want to be keeping an eye on. All right. The last calendar that we do want to check is what's going on the earnings calendar, because again, as we get the different earning releases, we know that heavily weighted stocks are going to affect the broader indices. So again, what are you doing on a Sunday? What are you doing in the morning each day? You're scanning the markets for those high impact, high volatility events. They've got to be scheduled. The market's got to know that they're coming. They've got to be scheduled, and they've got to be events that the market's able to discount. So these are the hot zones that you need to be aware of: the FOMC, data releases, as well as earnings. Okay. So that is, I think, a really good practice for each and every morning. All right, so let's get into some Q&A. Let's get into the charts. And let's see, first question is, good morning. Hey there, Alex. I'm starting a position in C. Okay, I've been there. So clearly it's post earnings. So I like where your head's at. Remember that C is going to be affected by other earnings in both the S&P and in the XLF. So while C has gotten past its earnings release, we can see a really nice volume ledge sitting here, 2 points of control. I do like that a lot. So the next thing that I would keep in mind for C would be essentially, where is your zone? What is it that you want to think about? Where and what is it you want to think about in terms of influence from other stocks in the broader sectors? I would stick with that volume ledge. All right, I would definitely stick with that volume ledge. And really kudos for your timing, because we don't want to enter necessarily on the volatility of the economic release. In other words, the earnings. We want to give the market a day or so to settle down. We talked about that yesterday in the sector secrets with specifically AMAT and Piton, which are both markets that I'm actually relatively bullish on still. But we want to let those volatility days calm down. Not every single sell-off. For example, Peloton. It wasn't a known event. That's not a hot zone. That's just a larger than average volatility day. You definitely want to let the market settle down after things like that. So I like the idea of being long. I mean, when you step back and look at XLF, and in this week's weekly watch list, if you're a member of Simpler Trading, I did the weekly watch list, and towards the end of that explainer video of what I'm watching, I started discussing rotation, understanding sector rotation, which is just when a market seems to have gone parabolic and is pushing to higher highs. When we do get rotation, which is not set on a calendar, you're not going to have usually this warning of when suddenly we're going to see the rotation. It's really more of a knee-jerk reaction. Keep an eye on XLF. I think you might see XLF, XLE, and some of these other names that I mentioned in that video benefit from that. Even though it looks like XLF is just en fuego, there are a number of names that could benefit from it. So I like the move to the upside. It's tracking with its broader average. It's not a relative outperformer, but I do like it potentially playing catch up. So that would be the justification for more movement higher. And by the way, if you want to join me in the Sector Secrets Mastery, two things, heads up. Wednesday, we're going to live stream my Wednesday session, 9:20 to 11:30. You can check that out on the Simpler Trading YouTube channel. And that's something I've never done. I don't know that I'm going to do that on any kind of regular basis. So if you have the time to set aside on Tuesday, about 2 hours, you guys are going to join that session. And or check us out at simplertrading.com/sector. All right, moving on to D-Dog and the 1, 2, 3. I love it. So we've been talking about these 1, 2, 3s. Wonderful ancient pattern. And so the question here is, would I call this a 1, 2, 3? So you need to determine if it's a 1, 2, 3 continuation or a 1, 2, 3 reversal, right? Because a 1, 2, 3 reversal is going to be something that we can utilize the wave in. So in this case, the 1, 2, 3, no, not yet. Would I call it a 1, 2, 3 formation if it turns in this area? Nice volume ledge, no doubt about that. You know, I would say I really don't love this as a 1, 2, 3. I really don't. However, you can keep an eye on it. Here's your 1. This is a Dow 1, 2, 3 pattern, gang. 1, 2, and then wherever 3 is going to end up. I love the point of control that we're seeing. And 3 points of control, great volume ledges. And, you know, if I'm looking at the quality of that pullback, and Fibonacci has some fantastic application to 1, 2, 3s. I'd like to see that too at about a 50%, even deeper pullback. So again, just to refresh the memory for those of you that may not be familiar with the pattern, this is the pattern. 1880s, Charles Dow, as in, yes, that Dow. And these are the patterns that he shared, explained, and they're part of his market phase analysis. And so these kind of patterns have been around forever. When you learn to train your eyes to them, look at the volume levels, look at different technical analysis, basically superimposed on the pattern, you'll find that there are some interesting opportunities. Be careful with this one, but certainly let's come back and see if it, come back, Prabish, and ask again if it does bounce, and we'll see if we like the pattern and what it might be doing if it does complete. Little too soon to tell, but I like where your head's at. All right, can I explain how I adapt to market cycles? Hey, the Christian, as of now, for example, very different than 3 months ago. Well, let's take a look. Now, you got to break it down to the individual indices, then the sectors, then the stocks. Okay, so 3 months ago, we're actually looking better than, if you go back to 3 months ago, meaning January, February, and I don't know, this is now April, so March, February, January, right? This is actually looking a little bit better because the uptrend is a whole lot more double green. I think what happened in the meantime is what hurt a lot of traders when we went into distribution, for example, in the S&P between the 26th of February and the 1st of April. But actually right now it's right back on track in terms of an uptrend. However, it's gone parabolic, which is always very tricky. It has not been pulling back. So we can start off with a broader index view. And again, if you guys join me on Wednesdays for what we're going to do in the Sector Secrets Mastery, you'll see me break these down. The next thing I've got to do after the indices, because by the way, the S&P doesn't look anything like the NAS, completely different market trends. So, in terms of swing trading right now, if swings are the synonym for a retracement, for a pullback within the context of an uptrend, if that's what swings are, well, you're right. We're not getting swings at the moment. And that just kind of brings me back to last year. And I think a lot of folks are finding out, wow, what happened between November and say February, very different market type. Very different market type where pullback buys worked again and again and again. And now, so that's really what I would recommend you compare. Market environments like this to market environments like this. And by the way, gang, this is now real trading. 2020 was a gift. It was wrapped in a bow. At first, it looked like the worst thing ever. By April, May, it was a gift. So now a lot of you out there saying, what's going on with the markets? it's called normal. A lot of people are saying, well, this is such a weird market. It really isn't. The weird market was last year, gang. And again, I say that because if you're still standing and you're able to understand the difference of what I'm sharing with you right now, you have the ability to rise above the sheeple, to rise above the masses and realize, gosh, this is the year we find out, if the things that I've learned and the tools that I've hopefully begun to master, I can apply in the right way. So it's kind of exciting. I think a lot of you are going to find out, wow, yeah, I am really pretty darn good at this. And this is the kind of year you find that out. Last year, not so much. So take last year as a gift it was. Try to recognize what worked for you really well last year. There's a lot of lessons to find out from last year. Last year, again, was a gift in many ways. Some of you might find, like I know this about myself, March of last year was my best month because I like those kind of moves to the downside. I didn't train myself to do that, just what I'm really good at. Look at the pockets, the months of 2020, because we had every kind of psychology possible at its extreme in 2020. Go back and study what and when you traded and when you did really well. That's what you want to say, okay, take a little snapshot of it and then find when it's happening in 2021. It may not be in the broader indices. It might be in a sector. It might be in an individual stock, but find out what you did so well last year, why it worked, right? And apply that to this year. And then you will find out, okay, that's how I find success in the market. And that's sort of my answer there for you, my friend. And thank you for the question. All right. So next question here. We talked about D-Dog. And let's see, MRO. All right. Keep those questions coming. We'll just tackle them one by one. So so Marathon Oil. So now you're talking my language. And I like the probability of XLE playing catch up to the narrative of reflation. Yesterday, in the Simpler Futures free video, I shared, probably not a sexy thing. Everyone wants to talk about what Tesla's doing. And I got to tell you guys something. Soybeans has kicked Tesla's arse in the last few months. So don't fall in love with symbols. Don't fall in love with certain stocks because last year they were so good to you. And I love the question about MRO because and you go, how do we go from MRO to soybeans? Because this is a reflation trade. The challenge here, though, is while I think we're going to resume the trend that preceded this current chop, how long is it going to move sideways? I can keep bullish directional bias, but what I'm going to have to do is keep a much longer time horizon, knowing that I'm going to need a little rotation. Rotation where? Probably a little bit of rotation out of tech and into energies, a little bit more of. Now, why would I contrast those two? Remember, gang, tech is high beta, high momentum, right? MRO, XLE, crude oil. This is a reflation trade. All right. Most of the marketplace likes high beta, high momentum, and they'll jump into hot names, which is right now why Tesla's frustrating so many traders. Why isn't it doing what it was doing last year? Gang, splits don't happen every year, and stocks don't get added to the S&P again and again and again. That was a very specific one-time type situation where those two major events basically overlapped each other, creating a fantastic parabolic move. You can't look for Tesla to behave like that because we don't have those catalysts, right? Look for where, but if you like that kind of catalyst, ask yourself, well, what markets could benefit from a major catalyst? And that's why I'm pointing out things like energy, crude oil. I love the MRO question, but here's what I would also ask is find out who MRO is hanging out with. I'll show you right now how to do it. It's really easy. Find out who MRO is hanging out with. Who is in the same group, swimming in the same pond as MRO. And then once you see that, whether it's frac, whether that reminds me of Battlestar Galactica, which is one of my favorite shows, is frac, or if you've watched the show, you know exactly what I mean. Or XOP, which I'm very bullish on as well. So go take a look at who they're hanging out with and find out if you can find some relative outperformance, because maybe MRO is not going to be the best example. Yeah. There might be a better structured stock that you could take advantage of. Yeah. All right. I hope that makes sense. And thank you for the question. And by the way, gang, I'm not bashing Tesla in any way. I mean, who knows what Elon's going to do? It's 420 after all. But a couple things to remember, since I kind of brought it up, we're at some interesting volume ledges in Tesla. I will say we are at some interesting volume ledges, and this zone that we're in. A lot of you might say, "Wait a minute, Rag. You know, you've been pointing out this 1, 2, 3, and that was the breakout. Thank you, Darvis. Right, that was the breakout." And then now we're pulling back to basically the breakout area plus a volume ledge. Look, having the ability to take advantage of that 1, 2, 3 retrace, it's still related to that 1, 2, 3. At one level, it triggered the momentum. Do I think this is a coincidence that as we took out the swing high of the 1, 2, 3 Dow pattern, that on April 1, 3, we launched higher? Markets are pulling back. A lot of people are going to panic. There's some good volume ledges there, gang. See these little volume ledges in here? Look at the point of control. Keep an eye on that. Most traders are looking at the market. See, this is where you guys have an advantage. So many things where you guys can gain an advantage. We are in a competitive game called trading, right? How can you gain an advantage? You're going to see the field in a different way. Most traders only see the field at price. This includes most of their indicators, because most of their indicators are calculated based on open, high, low, close. So you might say, well, Rag, I'm not looking at a naked chart. I'm looking at technical indicators. What are your technical indicators crunching through to give you the reading? Open, high, low, close, and some sort of arithmetic. You're still looking at price. Makes sense? 4 factors. Price, absolutely. Time, volatility, volume. Not in any particular order. If you can start to see the volume, not just that there was a higher low, but what kind of conviction is there, that is something we call submarket sonar. All right. And I love the visual that it gives. So some of you might have taken that class. It's probably my favorite named class ever. My partner here in the office, Trish, you guys know, she puts my classes together, and she named that one to Rag. It's below the surface, submarket sonar. It's like having a radar. Oh, I love that. I love metaphors and analogies and that visual. And I thought that was perfect. So think about what's happening below the surface. If everyone's just surface level and you're going down a little bit further, you're going down an atmosphere or two, you're going to see things they don't. It's the same thing when people talk about a 40,000 foot view. Now we talk about altitude. Same idea. Go down a few atmospheres, and all of a sudden you see things that people just existing at the surface of the water don't see. That's definitely some interesting volume there. And then, of course, like anything else, where is the volume and volatility event weighting? Well, of course, we talk about looking at the economic calendar for hot zones, FOMC events for hot zones, central bank events. Well, of course, earnings is one type of hot zone, and an important one at the stock level. So, yeah, MRO, love it. And again, we're probably going to need a little rotation out of the QQQ to see it. But again, think connectively, find where the relative outperformance is. And I think you're going to find that it might take a little while, but when the market starts to maybe scale back, take some profits on high beta, high momentum, you're going to see that reflation trade come back. Because right now it's taking a back seat. Little bit. So what is the ticker for soybeans? Infinite One. Check out last night's free video at the Simpler Trading YouTube channel. It is ZS. And you can also look at SOYB, because someone asked me about SOYB. So yeah, Prabish, you guys can look at the ETF, or you can look at the futures. Start at the futures level, though, and then you can take a look at the ETF alternative. And I did a video on ETF alternatives and how I look at the futures markets, but then also consider ETF alternatives for overnight swing trades, for options, as an ability that we have as multi-asset class traders like we want you to be comfortable becoming here at Simpler. We don't just focus on options, right? We made the transition from simpler options to simpler trading because Forex, futures, options, stocks, once you can kind of see the connective thread through everything, you're going to find a lot more opportunity and choices to make things work for your budget, for your risk tolerance, for your time horizon, etc. So I love that. Can we take a look at VLO? VLO is going to be a very similar comment, Valero, to what we just discussed on MRO. Same idea, slightly different market. This is actually much choppier in terms of the range, but I would say throw a slow stochastic or a ready aim fire on VLO. Focus your directional bias. Gang, people talk about trends. I started talking about directional bias early on in my teaching and trading career because directional bias can exist even when there's not a trend. This is not a trend. What happened before the chop was trending. My directional bias, still bullish. So find a volume ledge like we're at right now, find the oversold level, let something like an oscillator, ready and fire, slow stochastic help you, and then build that long position from the bottom of the range. That is what's known as a distribution market fade. Distribution being the type of market we're in, kind of going back to Christian's question. And the fade meaning we're going to buy into the weakness. All right, great questions, gang, and get them in early. And I appreciate FOMO Momo Boza. How you doing, my friend? I really enjoyed doing that class. Ultimate day trading class was actually a lot of fun to do too. That was a 6-hour mega day trading conversation. But again, if you guys join me Wednesday morning in the stream here, you'll see the link on the YouTube channel. You'll get a good idea of how a lot of what we talk about in Charts and Coffee, I apply to the market. All right, as always, thanks for joining me for Charts and Coffee. I appreciate the questions. You guys make the show. It's great. I really, and last but most important question, old or new? BSG reboot, Sammy. That BSG reboot was amazing. Yeah, definitely new. I'm also a Star Trek Next Generation girl, not the original. So be good to each other, gang. I'll see you tomorrow.